Okay, now, so today we're talking about the RSI, and the RSI, we talked about the RSI last week, and I'm going to do a repetition about the same. So basically, we say the work of the RSI indicator is just to show us when we expect potential buys, potential sell, potential rejections. It guides us all through because so many people keep on asking me, why don't you use indicators? Though my argument is different, because I don't like introducing indicators to my students at very early stages, because my agenda is for you to be dependent, not to be dependent on indicators and signals. So that's why I always want my students first to learn. Then once they learn, now they can now start to use indicators, because the indicators will make it easier for them to learn and they understand. But the most important is just to master the concept behind all those indicators. So I'll talk about the indicators and I'll talk about the RSI. RSI is one of the indicators that people use. Specifically, I'm going to use an RSI, we call it the stochastic RSI. That's what you're going to look at. Now, this stochastic RSI, it's divided into three different sessions. It has three different sessions like that. It has all those sessions. So this session is divided into three. The first session here, this is the overbought region, and this is like our resistance, and we call this the sell zone. And the RSI is usually set at 80. Then we have the equilibrium at this level in between, and it's usually set at some people set at 50 or 40. And we have the other one, this region, which we say this is the oversold region. Okay, oversold, and this will be our buy zone, and the RSI at this stage is usually at 20. Are we together? Some people use 100 here. They add 100 level here and 0 at this level. 0 here and 100 at this level. So how do we now check all that? How do we know when to enter? How does it help us? How does the RSI help us? So we have two different lines, just like our candlesticks. We have them red and green candles, and we say the red candles, we use them. They show us they represent the buyers, and the red ones represent the sellers. Now, in our today's session, we are going to use the line chart on this RSI. So we have the line, the blue line here. I'm just using the default settings. Some people ask me which settings do you send me the settings that you used when setting the RSI. Okay, but I usually use the default settings once I use the indicator. Now we have the red and orange lines. Now the blue line represents the buyers, and the orange one represents the sellers. Okay, so we have this blue one. This one is the buyers, and this one is the sellers. Those two lines. So anytime you see this blue line on this side, I don't know if this is my right side or the left side. When you see the blue line on that side, it means now this is a nice time for us to do what? To buy. When you see the blue one on this side here, The orange one, it indicates time for what? For a sell. Now let's do it practically here. So when, let's say the market came all the way, let me change this color here so that you can see clearly. Let me make it white. White, no. Which color do you use? Men and colors. Okay, let me use that one. So when we have this blue line here, this is the blue line, and it came all the way past our equilibrium. And remember, as it moves like that, it means this market is dominated by sellers. So once the market is at this level, it means this market is oversold. Okay. So what are we expecting? We expect the market to come at 0. Then we are expecting a reversal so that we can start to buy. So once it reaches at inside RSI 20, you see this is 20. So anywhere in here, it means that's a nice opportunity for us to what? To buy. Okay. So you see the market moving like that. Then when it comes to the overbought region, we expect the market to do what? To sell. So we sell once it enters at this region. That's when we sell, expecting the market to come all the way to our zone. Now let's look at the other line. The other line also gives us confirmation because these two lines have to work together. So if this was the, we say when this one is on this side, it means those are sellers. They are pushing down the price. So when they come and meet at a level like this, they cross each other. After crossing each other, it means now they are changing direction. So the only confirmation they can know if this is nice time for us to buy is when they entered at 20. So once they enter at 20, you can see that is a very clean buy all the way. So when they cross at the overbought region, it means now the market is changing direction. We expect them to, once they enter at 80 here, that's a nice opportunity for us to sell, targeting this region. So once they come here, change direction again, that's what we expect. Okay, and this blue line, they will come and maybe cross each other and go all the way. So anywhere they cross each other, it shows us that's when we should now be ready for change of direction once they cross each other. So when this comes and they cross each other at this level, it means now that market has changed to what? The market has changed direction. So we're preparing to take a buy. Okay, but we only buy when you get a confirmation when the market enters this region. Okay, now when the market comes and they cross each other at our overbought region, when they cross each other like this is an indication that this market is going to do what? To sell. Okay, so we only sell when this market enters this region like that. That's when now we do what? We take a sell. So let's look at our graph and see if we can translate this and apply this on our live market. Let's see. Let's look at the history. Let's see what happened previously. We see if this market is respecting our concept. So I want you to observe this. These two, let me zoom a little bit. Push this one up a little bit. So when these two lines crossed each other at this level, at that level, you can see they crossed each other at this level. What does it mean? We prepare to take a what? To take a buy. So when do we buy? When they enter at our region here. Ikirukia tu kidogo hivi, that's when we enter. So our entry would be at this level with this third candle here. Okay, some people can enter when they cross each other at this side, because when they cross each other, you see the exchange of direction. There was a sell, they came all of a sudden. So at this point, when we got this green candle, that's when we got the crossover at this level. That's when we got the crossover. So meaning now this market is about to buy, but we only buy when we get a confirmation, when the RSI, the two lines enter at this region. Remember, this is the region I'm talking about. I hope you can see the difference, the three dotted lines, this region here. So once they enter that region, that's when we get a confirmation for a buy. Let's look at the sell. Look at the lines, they came all the way, crossed each other at this level. Okay, so when they crossed each other at this level, you can see, I think I should get a straight line. Let me see if I can get a straight line. So once they crossed each other at this side, you can see there was a sell. Are we together? There was a clean sell at this region, because these lines, we've already gotten some confirmation from these. So let's look at another one. This one here, these two lines came and crossed each other. These two lines came and crossed each other. They entered this region, then they retraced back. So this is a fake move at this region. They entered this region. Some people bought all the way from here up to here. Then the market went down, closed again. So this means this was a fake move, because it pretended to be buying when it entered this region. That's why we also need proper risk management. Okay, that's why we need proper risk management, because if this market decides to buy, then all of a sudden it decides to sell and you're already in, what happens? You are liquidated. So for you to avoid that, that's why I always tell people to ensure proper risk management. Let's look at the other item. So the market came all the way at this level. You can see all the way to this area. There was change of direction, the two lines crossed each other. Then what happened? There was a buy, though there was some sort of consolidation, not a good one, a very messy market. Okay, but you can see if you entered for a buy at this level, by the time you got here, even if there is that consolidation, you could have made some good money. Are we together? Then at this region, they crossed each other, and you can see there was, no, this is the level here, almost here. You can see at this level, there was rejection for buys, and there was a clean sale all the way. I don't know if you're getting. I don't know if you are together. Remember, we are combining all these concepts as we learn and look at the different concepts that we've learned, all those different concepts that I've taught you, the support and this resistance, the liquidity sweep. This is another tool which is really important, because you can see this market is within the support. We might expect the market, it has been rejected the second time here. So the market might create support at that region. So we can use our fib. We draw from this support to this resistance and back like that. Okay, so where will be our buy entry? We are going to buy if we get a breakout where? Here. So once we get a breakout here, this will be our entry point. This will be TP1, TP2, TP3, TP4, TP5. Now look at this buy which is happening here. This buy is because of this crossover at this level. Because sometimes the market can reverse at the equilibrium. Because look at all these rejections. Look at where the market is rejecting almost at the equilibrium. Okay, so that is also another level where you can enter. So either you can enter this equilibrium here when you see some sign of reversal and when you see the crossover, or you can enter at this region, at the oversold region, or at our overbought region. So this buy we are getting here is because of this impact. The lines have crossed each other. So buy, you can see there's a nice buy there. Then if you take a buy after they cross each other, if you took a buy at this level, where will be your stop loss? Your stop loss will be below this line. Or some people will wait for the market to come to our entry. What I taught you about the fib. This will be our buy entry. TP1, TP2, TP3, TP4, TP5. And that's how it goes. Look at that buy. Look at how it's pushing up. I don't know if there's any question. The time frame that I'm using is just 3 minutes because the market is not looking so good. If you look at 15, 5 minutes, the market is consolidating a lot. Look at this market, lots of consolidation. So I had to use lower time frame so that I can get a better move. And that's what you do. If you're not patient enough to wait for the market to give you a clear move, you can do lower time frame, as low as 1 minute, as low as 5 minutes, as low as 3 minutes, if you want to get that fine move. But if you're patient enough, you wait for the market to stabilize. This is not a good market. You can see all these small candles with very small body with very long wicks. This is not a good market. I don't know if you are together. So at this point, if you are using 15 minutes, you can see the RSI is just playing within the oversold region, pretending to go up, go back, pretend to go up, go back, pretend to go up, go back. So big entry will have a very nice move when the market hits. The two lines come, cross each other, then they come to this region. They enter at the RSI 20. That's when we will have a very clear buy. Or you can go to lower time frame like 5 minutes and look for the same pattern like this one. The market is already at 20. So we might expect some buys because you can see they crossed each other. That's why we got this buy. After this rejection here, you can see there was a clean buy. And I think you saw that buy when we went to 3 minutes and when we went to 1 minute. You saw that buy. I told you the market would create support. Look at the market in 5 minutes. The market is within this support zone. So the buy entry would be at this level 51.58, TP1 51.61, TP2 64, TP3 66, TP4 71. Then of course TP5 75. Okay, you never get a mentor who tells you all these secrets, how they analyze the market, how they come up with all those take profits and stop losses. I don't know if you are together. Far are you here? Hassan, did you take the morning buy? Did you take the buy in the morning? Yes. I can't hear you. Yeah, I can't hear you well. I can't hear you. Unapotea? Yes. What? I can't hear you to be honest. Yes, I said okay. I've now understood your question. Now the RSI, I said it will show us the overbought and the oversold returns. When the price is overbought or when the price is oversold. That's the number one. Okay. Now the second one, it shows us the speed, how the market is moving. It shows us the speed. It also shows us the uh, how the price is moving. Yeah, that's what I can say. Because RSI simply means relative strength index. Relative strength index. The strength. Okay. Or we can say the momentum in that market, or how the speed of that price, how the market is moving. So you can see when you see all these, look at all these, look at this speed. These are very low speed. What does it mean? A lot of consolidation. The market is very slow. There's a lot of consolidation. But when you see this big move here, or when you see this one here, you'll always see a big candle like this one associated by these big or long candles. When you see this one, this is a nice move. I think we talked about how to identify consolidation. So it means there was a high speed. So there was a lot of momentum from the buyers at this region. Okay, okay. Are we together? So I was introducing you to this AI, a very AI which uses the same concept, but the advantage of it for the guys who are lazy, not to say lazy, but if you are busy, it will easily show you when to enter, when to exit. Look at this one. This is the RSI. This is the AI because you know the future of technology. We have AI with us, and we can't ignore AI. Now, when I was at the expo in Dubai, they gave a very practical example of a company which ignored technology when there was a revolution. When at the communication side of it, there was change, there was a big revolution. And you remember, we were shifting from the old phones which had some buttons. You remember the big phones with the big antenna. You remember, guys, during that time. You remember the Motorola. You remember the big Nokia 3310. Very heavy phones. You could not even pocket that phone. You just put it in your handbag or your bag. You could not pocket those big phones. So what happened when they were now changing from now those big phones to small phones to the smart now technology? What happened? Some companies did not change, did not adjust immediately to that change. They still remained undermanned too, and they said, now we are known for producing these good and reliable phones with good connection, with good battery, with big buttons where you could easily type and send a message. So they said, now we are not shifting from that to Android. So what happened after that delay? When they delayed from shifting from the analog bit of it to the digital one. Remember those phones when they are shifting from those buttons? I know many of us used them. The Gen Zs cannot understand. When we are shifting from those buttons now to the Android, the touchscreen phones, now some companies remained behind. And the example that they gave was Nokia. Remember Nokia? Nokia took a lot of time by the time they started to produce their first smartphone. And since they were Nokia was a very big company, what happened to Nokia? It crashed. The shares crashed. The company crashed because it did not adapt to the change. So the other companies which took advantage of that revolution very fast, they made crazy sales like the Samsung, if you remember. So that's how we easily started to lose Nokia, Motorola, and there was another one. Yeah, BlackBerry. Ah, yeah, you remember the BlackBerry. It was a very reliable phone. BlackBerry that time was like a Mercedes. Very, very big, very expensive, very reliable. It was a very nice phone. But what happened when BlackBerry took a lot of years to move from analog to digital? They lost them. They got lost. They were swallowed up. Okay. So this means as we also look at all this, we also have to adjust also to all these situations because technology is revolving. So this is now introduction of this AI, which was it works and yes, yes, to mute. Okay. 1 minute. Let me try. Let's mute our microphones. Let me see who has his microphone. Okay, okay, I've muted. Okay, I hope you guys can hear me. So this is a very simple AI which uses the same idea at the RSI. You can see it's based on RSI and something we also call volume. I'll talk about volume in another session. I'll talk about this volume indicator. This volume indicator shows us also when the market is overbought and when the market is about to do what? To buy. Because look at this area here. This is now the equilibrium again, just like our RSI. So when they cross, this line crosses my equilibrium here, it means we are going to sell. Okay, there's a sell, or the way the volume will start to decrease. Now, when it crosses this line, you see there was a big pressure from the buyers. That was a clean buy. So this is the volume. I'll talk about the volume indicators. I know these, I've never talked about this. So it's a combination of the trend lines, the lines that we were drawing. You guys remember how we were drawing lines every day, drawing lines. This also applies, it uses the same concept as the fib. You can see it's drawing the levels. You can see all these levels again. We drew all these lines. My old students know how we used to draw these lines every single day. Like bet you remember. So this RSI is combining all that. This AI is combining all these concepts. So you can see when the volume, when the RSI crosses, they cross each other. When these two lines cross each other at this level, you can see there was an indication of a buy at this level, and you can see the volume here. You can see the volume here has turned now green. It has crossed the momentum, the equilibrium. So it shows there is a lot of pressure from the buyers. So you can see there was a clean buy. Then once it confirms, there's another indicator we call the moving average. I also talk about the moving average. RSI is it's also part of the moving average. So the moving average also works like this. So when you see this green line here, when you see this green stuff, it means now this market is bullish. So we get a signal for a buy when we have this volume. You can see it's heavy. There's a lot of pressure here, shows the buyers are very strong. So at this level, that's when we should take a watch, take a buy. Okay, and you can see how the market pushed. Now, at another level, you can see at this level, the market tried to push down. You can see the market tried to push down at this level. There was a small sell. Even you can see at this RSI, they crossed this region. The lines crossed each other at the equilibrium. Then there was a sell all the way to this level. They crossed each other, the two lines. Then there was a buy at this level. After they crossed each other, you can see there is indication of a diamond and this green arrow. It shows you this is a nice opportunity for you to even add more positions. Some people say that like Farah. So if you want to trade with this concept, when it taps this line, I'll talk about the moving average, you will understand that better. When it touches this line, and you can see this two lines crossed each other at this level, that's an indication we are going to buy. And you can see there was a clean buy all the way to that level. Now at this side, these are funny move because this was last week's news. For the guys who remember that news, 6 p.m. news, which happened on Friday. This was news, so don't worry about this news. But the move continued. You can see the move continued. You can see there's a lot of volume. So at this level, we might expect this to turn like that, and the volume continue to come down. So at this area also, we might expect the market to come, break this equilibrium, then the volume to reduce, then we can take a buy when the market goes up like that. So at this level, when the two lines, we got a confirmation, there's good volume from here, and the RSI has already closed this region here. So that's an indication that the buyers are about to take over. Look at this area. Look at this clean buy here. From this area, when the RSI entered my level 20 here, sorry. When the RSI entered my level at 20 here, you can see there was that big buy all the way. For the guys who trade with so many positions, multiple positions like me, you can wait, come and touch this green moving average, this region here. Once it taps this region, you can add more positions and continue all the way. I talk about the moving average in a different class, but basically this helps us to, it identifies our entries and our exit points, because exit are like our take profits and the stop losses. For instance, on Friday it gave a signal for a buy entry at this level, and you see this is working in line with our trend lines. There was a buy entry at this level. Then this will be the TP1, exit 1, TP2 here at this area. And you can see today the market, it hit all the way to TP4, TP3 and TP4. It also highlights the consolidation. Look at this rectangle here. This rectangle shows some consolidation. You can see the market is consolidating. For the guys who have watched the market, it's not a very interesting market. The market has started to consolidate. So you can see generally when it gave this buy entry at this level, it has already hit all the take profits. Take profit 1, 2, 3, 4. And then where do you put your stop loss? At this area. You can exit at this area, okay? Or you can exit at this level when you enter this area. You remember how I taught you about the stop loss. If you buy at this level, if you enter at this level, this area will be your stop loss. Or if you have enough money, this area you have, this area will be your stop loss. Or if you are patient enough, you are hard call, this will be the other exit, your stop loss. So it makes our work easier for the people who understand all these concepts, because I cannot tell a beginner to just buy this indicator and just start trading, and you don't know how it works. You don't know, you don't have any concept. You'll find yourself losing all your money. But if you already have this concept with you, if you already know how it works, like now this market is consolidating, you can see this region is marked. it marks automatically. So you don't need to enter that market unless you get a clear confirmation. So we are combining all these concepts together. So this an AI. It scans all that and shows us when to enter, when to exit. I also have another one. Let me check. But this one I used this so many years ago. It uses the same concept that I teach. That's the beauty thing of all this. Because I've seen so many people online selling. You wake up in the morning, then you start telling people, I'm a trader. I'm selling a bot. It analyzes the market for you and places a trade on your behalf. That's why I said last week, I pity my beginners because, man, there are so many con men outside there. Everyone is waking up and saying, I know how to trade. Everyone, I know how to trade. So it's very hard for you to identify who is a legitimate, who is the legit one if everyone is has something to offer. But now they've shifted. They don't want now to teach. They tell you now you can just use AI and be able to identify your entries and just take a trade. You don't need to struggle analyzing the chart. So if you don't know risk management, if you don't know your exit levels, when to exit, how will you survive in this market? That's not a long-term solution if you want to be a long-term trader. But if you want shortcuts, that will be the end of you. So this is another one. This is another AI tool which also uses my same strategy. It uses the same strategy as the RSI, but the RSI is not here. But you can see at this level, when you see this dot, it shows where you went to buy. This red one shows you when to sell. This one tells you when to buy again. And then there's a big confirmation. When you see this red color here, it means this is a confirmed sell. But when you see a faded one, it means this is a buy but not confirmed. It's also in a sell but not confirmed. But when you get this green arrow here, it shows you these are confirmed buy. And you guys, you remember how I trade using the trend lines, the levels. You can see when the candle closed above this line, you can see these lines. There are so many lines here. We have the green, the blue, the white, the yellow lines. When you see the market crossing above that line, you see there is a big move. And our take profit would be the next line, TP1 here, TP2, TP3, TP4, going all the way. And you see the market playing within these two lines. So this also uses the same concept that I teach you. Even if you go to higher time frame, 15 minutes to 30 minutes, it works the same. You can see it works the same. And it also gives you notifications when the market is extremely overbought. Like you can see here, the market is at this level. It's extremely overbought. You remember the overbought regions we are at when we're using the RSI, and this is the same region shows you there's possible of the market creating a resistance at this level. So overbought regions will also represent there. You can see it's also written here, ultimate resistance. Okay, so the overbought regions, that's why I said those like they act as our resistance. Oversold regions, like let me see example of a oversold region, extremely oversold, extremely oversold. These regions here, they act as our big support zones. So these are our resistance, extremely overshoot, overbought, all overshoot. Then we have extremely oversold. So this will be like our support. So it's just the same concept. So we cannot ignore all these all this new technology. We cannot ignore that. So, but the most important is for you guys to learn, understand, and the most important of all, risk management and protecting your own capital. That's the most important, because you can have all these scanners, you can have a very nice strategy. I've seen people who have a lot of knowledge in trading. I know someone who started trading in 2008. 2008, I was in class 7. Someone had knowledge about trading. And that same person, while I was in class 7, I came all the way and became his mentor. Look at that big difference. So you can have a lot of knowledge, you can have a lot of skills, but at the end of the day, you are not profitable. I know some people who teach so well. They teach so well. They are I will not mention names. They are all over TikTok. You'll see them TikTok making a lot of noise. But once you give them your MT5, your account cannot even last more than 5 minutes. They lose everything. But they can prove to you, why are they buying? Why are they selling? They will tell you all these points. The market is within my oversold, all my resistance. So I'm waiting for a rejection candle, this and this candle. They even tell you the name of that candle. I'm waiting for a pullback. Then I'm now entering with the third candle. Then this will be my take profit one, two, three, and my stop loss will be at this level. But at the end of the day, when you give them your MT5, they mess up within 5 minutes or less. They blow that account. So you can have a lot of knowledge, you can have all these indicators, you can all have all these skills, but at the end of the day, if you don't know how to protect your capital, then you'll end up to be you'll always lose, and you'll always say Forex is a scam. I don't know if there's any question before now we close. I missed you guys. For my old students, please make sure you inbox me for the guys who are not in my VIP, so that you can also join the others, please. Yes, Farah. Yes, Farah, please. We can't hear you. Are you dozing off? Try to shout a little bit. Yes. Yeah. Yes. Yeah. The best that I've seen so far, it's working perfectly is within 15 and 5 minutes. Yes. Yeah, that's the perfect one. That's what have tried, and that's what I've tried and tested. The 15 and 5 minutes. Okay. Okay. So with that said and done, can I allow you guys to rest? Okay, so let's stop there. I hope you learned something. Try the RSI thing, try the RSI indicator, then try to observe if it will work with the strategy that I've always taught you guys. Like as you can see, this look at where the market is rejecting at our entry. This is our entry point. For the guys who are in my group who are already trading, let me give a signal right now. This is the buy entry. You can buy now, buy entry. So this is 5 minutes because the market is not looking so good. This is the buy entry. If this is my buy entry at this level, this will be my GT1. TP2, TP3, TP4, and this is TP5. Just using all those levels. I've taught you all these. And if you don't remember all these concepts, my videos are all over on YouTube. You can check them out, or you can attend my sessions for my new students, which happen every single day. This day, days of late, I've been very consistent from 8 a.m. daily, 8 a.m. all 8:30 a.m. When I'm late, 8:30, latest 8:30, every single day, Monday to Friday. Sometimes when I get home very early, I can do a session even in the evening. So if you want to always refresh, that's why I said my classes are not limited. There is no limit in terms of duration, how long the class will take, or how long the course will take. I don't limit my students. Once you subscribe to my classes, that's all you need. So every day is a learning day. We learn every day. Anytime I share a link, make sure you also join in. If you're free, just join and listen, have a listen, and you'll always get something. I That is D. Ellen. I send every day links to join. Yes, all the groups. I have 8 groups for guys in diaspora. I send, go and look at the charts. You'll see all those links every day. And I always like to write a message. Guys, let's join this class. So when you are free, it doesn't have to be in line with your time. When you are free and you find that, if you see me send that message, especially around this time, always, if you are free, just join. Okay. But Ellen, you are doing a good job. I've been following you, Ellen, and Farah. You're doing a good job. Yes, yes, Hassan. Long time. Yes, the best areas to enter. That's a nice question. Is when it's within these resistance, the overbought or the oversold regions. This lower side or this upper side. Don't enter when the market is playing within these regions. Yeah. Okay. Welcome. Okay, Farah's already gotten it. I don't know if you tested it this morning when the market was opening. You did you never tried it? Oh, you tried. Oh, nice, nice. Okay. So thank you so much, guys. Okay, okay, okay. Thank you, guys, and you have a good day. You have a good night, and see you tomorrow. Till tomorrow, we have that session also. So make sure you join in every day. We'll be having these classes. Okay, you have a good night.